Imagine discovering that your spouse has stolen $2 million.
That's terrible.
Now, imagine hiring lawyers and forensic accountants to find it.
That sounds very expensive.
Right. And now imagine discovering that the $2 million was never there in the first place.
And somehow that is often the least popular answer.
Today, on the F word, the missing millions that were never actually missing.
It's less Ocean's 11 and more like 20 years of groceries, mortgages, and school fees.
With considerably fewer less car chases.
Although roughly the same legal bills.
Welcome to the F word, the podcast about fraud, forensics, finance, and the fascinating things people do when they think nobody is looking. I'm Indianna.
And I'm Dave Oswald, a forensics accountant, fraud investigator, and professional destroyer of financial convenience theories.
And a comedian. That last part sounds terrible for marketing, Dave.
It probably is. Clients generally prefer the investigator who says, "You're right. Your former spouse stole millions. I've located the yacht."
And what do you sometimes have to say instead?
It goes more along the lines of, "I've located the Costco transactions."
It's not very exciting.
No, and nobody has ever burst into tears of joy because we successfully reconciled 12 years of property taxes.
So we are talking today about a pattern you have been seeing more frequently in divorce matters. One spouse is absolutely certain, convinced that the other has hidden or stolen a fortune.
Yes, and sometimes they're right. People do hide assets. They do divert income and they do maintain undisclosed accounts, move money through companies, understate business interests, buy assets through related parties, and dissipate family property.
So the suspicion is not inherently unreasonable.
Well, no, not at all. That's why forensics accountants are brought into this type of case. But there's another category. We obtain the banking records, we reconstruct the transactions, we trace the transfers, account for the income, taxes, debt, investments, and ordinary spending, and eventually reach a fairly clear conclusion.
Nothing is missing, right?
Or, more precisely, there's no financial evidence supporting the allegation that millions were diverted or concealed.
And the client says,
You must have missed it.
Dave, surely, which must be an awkward performance review.
Particularly when it comes from somebody who's engaged you because of your expertise.
It's awkward. So let's start with the basic misconception. Someone looks at a marriage and says, we earn millions, therefore we should have millions.
Exactly. Suppose a household earned $400,000 a year for 10 years. That headline number is 4 million. Looking backwards, it's very easy to say, we earned 4 million. Where is it?
Sounds pretty persuasive.
Until we introduce income tax, which remains one of Canada's more successful asset tracing programs.
It's that sense of humor again, Dave. The government found its share remarkably quickly.
Always. And then there's mortgage, interest, car payments, children, holidays, insurance, renovations, restaurants, school costs, professional fees, utilities, and thousands of other ordinary purchases that nobody remembers individually.
I almost wanted to burst into tears there, Dave. No single dinner explains the missing fortune.
But 20 years of dinners can help. People tend to remember major purchases and forget the relentless financial drop of ordinary life. The money did not necessarily disappear. It may simply have been consumed.
Which is less satisfying than theft because there is nobody to blame and nothing to recover.
Precisely. Your spouse stole it. Comes with a villain and the possibility of a future check. The family spent it. Comes with old photographs of holidays, a kitchen renovation that now nobody admits liking.
You had a case that captured this perfectly recently. The husband worked in the Treasury Department of a major bank.
In a senior position. On paper, he was exactly the sort of person people would assume had invested wisely and accumulated substantial wealth. He understood the financial markets, he had a good income, and he had an impressive job title.
Therefore, the assumption was that the money must exist somewhere, right?
Yes, his professional expertise actually became part of the suspicion. If a senior Treasury executive had not accumulated a fortune, he must have concealed it.
And so what did the records show?
Well, the records actually showed the opposite. Rather than quietly building a secret fortune, he had actually been withdrawing money from his TFSA. to fund ordinary living expenses.
The cobbler's children has no shoes.
Exactly. Expertise at work does not automatically translate into good financial management at home. A cardiologist can eat badly. A mechanic can drive a terrible car. An accountant can have a box of unopened tax correspondence.
And no names, of course. Right.
Naturally. But a senior title in banking tells us that somebody understands finance. It does not prove that they invested their own money, retained it, or had hidden wealth to conceal.
It's kind of sad, but there's also a difference between earning well and living below your means.
A very large difference. Wealth is what remains after tax and spending. High income merely gives you the opportunity to build it. It, however, does not compel you to do so.
In the article, you distinguish between three statements that sound similar but are actually very, very different.
Yes, the first is, I do not have the wealth I expected to have. The second is, I do not understand where all our money went. And the third is, my spouse stole the difference.
Only the third alleges wrongdoing.
Correct, but disappointment about the first, combined with uncertainty about the second, can make the third feel kind of obvious.
Especially during divorce when trust has already collapsed.
Yes, if someone discovers dishonesty in one part of the marriage, it is understandable that they begin re-examining everything else. If I was deceived about that, what else could I be deceived about? It's a reasonable question.
So, when does it become unreasonable?
When possible becomes probable, when probable becomes certain, and that certainty exists without financial evidence moving with it.
So, an innocent transfer from 6 years ago suddenly looks kind of sinister.
Exactly. An unfamiliar account number is the secret account. A cash withdrawal is dissipation. A corporation is where the money was hidden.
And if you explain the transfer,
Attention that moves to the next unexplained item. The theory survives. Only the supporting transaction changes.
like a financial game of whack a mole.
Yes, but unfortunately each mole is billed by the hour.
Sounds expensive. So, forensic accountants naturally believe that evidence should settle a financial question, right?
We do. We have an almost touching faith in spreadsheets that we prepare.
Pivot tables, instruments of peace.
If we can account for 97 or 98 cents of every dollar, we expect the allegation that several million dollars vanished to become a lot less plausible.
But people don't process emotionally important beliefs like spreadsheets.
Unfortunately, no. A spreadsheet has no betrayal, no resentment, no memory for who ruined Christmas in 2014.
So let's talk about confirmation bias.
Again, once somebody believes the money has been hidden, ambiguous information is interpreted through that belief. They notice information that supports the theory that they have and discount information that does not support their theory.
So every unexplained transaction looks suspicious.
And every explained transaction may be dismissed as part of the concealment. The belief becomes self-protecting.
Then there's belief of perseverance.
By the time we become involved, the allegation has often been repeated for months and maybe even years to lawyers, friends, family, and in some cases, even in sworn documents. There's $2 million missing. Stops being a working hypothesis. It becomes part of the history of the divorce.
So changing your mind then has a psychological cost on top of everything.
A significant one. You have to accept that not only that the money is not there, but that you accused somebody, spent heavily, and built part of your legal strategy around a proposition that the evidence does not support.
So now this brings us to motivated reasoning.
Well, my spouse stole our money, offers a wrongdoing, an explanation, and the hope of recovery. We spend far more than I realized, offers none of those things. The less accurate explanation may be emotionally more useful.
The spreadsheet is being asked to defeat a story.
And stories are powerful, especially stories that contain villains and missing treasure.
So at some point, right, the allegation can become impossible to disprove.
And that is where matters become really dangerous. We begin with a testable proposition. There should be approximately 2 million that cannot be accounted for.
And then it changes along the way.
Well, it becomes the fact that you cannot find it means find the 2 million proves how well it was hidden.
Well, that's convenient.
Extremely. We review 5 years of banking and find nothing material. Perhaps it happened earlier. We review tenures. Perhaps there's another bank. We obtain records from the other bank. Perhaps there's a corporation.
Then I start begging, Dave, are you sure that you looked properly? Review the corporation.
Oh, and then perhaps there's even an overseas account.
You find no overseas account?
Cryptocurrency?
Naturally, you're giving me heart palpitations.
And cryptocurrency has become the modern answer to where could an asset be if there's no evidence that exists, with slightly better branding.
But the problem is that there is no natural endpoint by the sounds of it.
Correct. A proper investigation needs a hypothesis that can be tested for and criteria for stopping. If every failure to find evidence creates a new place to search, the assignment can continue indefinitely.
Which could be excellent for billing, right?
And that's the uncomfortable part of our profession. Lawyers and forensics accountants can do rather well from a search with no defined endpoint.
Is the investigation therefore, improper?
No, not necessarily. Genuine hidden asset cases demand persistence. Sophisticated concealment can take time to unravel, but professionals have a responsibility to distinguish persistence from an endless search for evidence supporting a conclusion that has already been reached.
This is a really hard one, Dave. I'm taking this quite personally, but let's suppose the client has already spent, let's say $50,000 or $100,000 investigating.
Well, now you get to the really painful part, because the client thinks that stopping is going to be a waste. If I stop now, then I've wasted all that money.
Oh gosh! So they spend what, another $20,000 trying to justify their first $100,000?
It's a bit like a normal fraud. You know, when you put money into an investment scheme and you realize it's not coming out, and they say you just have to pay another $20,000 to get your money back, even though you know you've lost it. It's the same psychology that works here. It's a sunk cost problem. Past expenditures begin driving the decisions, even though the rational question is whether the next dollar is actually likely to produce any useful evidence.
So there is a fairly brutal irony here.
There is. An investigation into supposedly disappearing financial wealth can itself become a highly efficient way of consuming whatever wealth the family remains.
So, I mean, at least this money is easy to trace.
Yes, it's usually sitting in the lawyer's or the forensics accountant's trust account.
So how should the professional handle it?
By defining the question, the scope, and stopping at the beginning, we should tell the client what evidence would support the allegation, what evidence would weaken it, and what work is proportionate to the amount genuinely unexplained.
You argue that where did the money go may not be the best opening question.
The better question is, why do you believe there should be another $2 million?
You establish the existence of the treasure before commissioning the map, right?
Exactly. Was there a business sale? Was income materially higher than reported? Did an investment account once hold money? Is there evidence of undisclosed assets? Or has gross income over many years simply been mistaken for accumulated wealth?
And then ask what evidence would cause us to conclude that the allegation is not supported.
That is essential. If the honest answer is nothing, we do not have a testable financial hypothesis. We only have a belief.
And forensic accounting cannot disprove every imaginable possibility, unfortunately.
Nor should it try. We can examine defined records, explain unidentified flows, test allegations, and report what the evidence supports. We cannot prove that no undisclosed dollar exists anywhere on Earth.
Though someone's going to inevitably ask.
Usually just before requesting a fixed fee.
So, that being said, what should a sensible first stage review look like?
Start with known sources of funds, reconcile those against taxes, asset purchases, debt repayment, identifiable lifestyle spending, transfers between known accounts, and the assets remaining at the end of the period.
So remove transfers between family accounts so the same dollar is not counted twice.
Very important. Moving 100,000 from a checking account to savings does not create another 100,000 of wealth, however impressive it looks in the spreadsheet total.
So then quantify what genuinely remained unexplained.
Yes, the conclusion might say, we have identified approximately 4.2 million available to the family. About 97% of that was reconciled to taxation, living costs, acquisition, debt repayments, and transfers between no accounts. We found no transactional patterns or unexplained outflows supporting the allegation that approximately 2 million was diverted or concealed.
So that's not to say nobody has ever stolen anything.
No, it does not claim omniscient science. It simply says that the allegation is not supported by the financial evidence examined. That is an evidence-based conclusion, not a philosophical statement about the universe.
And it gives the clients and lawyers something useful, a point at which to make a rational decision about whether further work is justified.
Exactly. If the unreconciled amount is small and consistent with incomplete records, spending another 100,000 may not be proportionate. If there's a large unexplained transfer to an unknown account, that is different. Following the evidence, not the desired ending.
There are, of course, divorce cases involving genuine hidden assets, dissipation, and deliberate financial deception, though, right?
Unfortunately, a lot more than we'd like to believe. Those cases actually deserve rigorous investigation, but a serious allegation should not become immune from evidence simply because it's serious.
So just quick on before we carry on, what exactly is dissipation, Dave? Just for me who doesn't
Getting
know.
rid of it's how wealth is spread out, where it goes to, how it
Okay,
is
that makes sense.
dispersed.
I was going to say the dissipation. So the forensic accountant's job is not to validate the client's theory.
No, it's to test it.
Sometimes you find the secret account.
Sometimes we find the diverted income.
Sometimes it's the overseas asset, the yacht.
And sometimes you find that 20 years of mortgages, school fees, cars, holiday, and ordinary life are all it takes to spend your money.
Phew, the millions did not disappear.
Well, in a sense, they did, but they disappeared into ordinary day-to-day spending. They never existed as accumulated wealth in the first place.
Which may be the least dramatic conclusion, actually.
But it also can be the most valuable. Knowing when to stop searching may save a divorcing family more money than finding one transaction ever will.
And if your forensic accountant tells you that nothing is missing, then what?
It is possible that they missed it,
Well, that's not very reassuring, Dave.
but it's also possible that the finding nothing is the finding.
Well, I know it's a tough one to swallow, guys, but that's it for this episode of The F Word. If you enjoyed it, follow the show and share it with someone who believes a high salary automatically produces a high net worth.
Preferably before they renovate the kitchen yet again.
Until next time.